Hey everyone, and welcome to Earnings Cheat Sheet for Friday, July 26th. It's Alexis Garcia and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. So, Ed, jam-packed week. We've got a lot of the Magnificent Seven stocks reporting at a pivotal time for tech stocks in the market.
Yeah, need to see some strength in the NASDAQ, and we'll see if Apple, Microsoft, Meta, and Amazon can provide that.
All right, well, let's jump right in with Microsoft. The tech giant is scheduled to report Q4 earnings on Tuesday, July 30th. Earnings are expected to climb 9% to $293 per share, and revenue is expected to rise 15% to $56.19 billion. And here's why we're watching Microsoft. We'll want to see signs of AI monetization via Copilot productions for Office and look for any comments on software development. That includes GitHub Copilot applications. We also want to see continued strength and possibly share gains in the Azure cloud computing business. So, Ed, Microsoft in the news lately really took it on the chin July 19th after the whole blue screen of death fiasco. That was due to a software update from CrowdStrike. The company posted one of its worst weekly declines in more than a year. And just some really important context for all these earnings reports next week, because it seems like Wall Street hasn't really been that enthusiastic about some of the results from Google and Tesla, which suggests there may be some AI fatigue. So what are you looking at here as Microsoft is due to report?
Yeah, Microsoft is so important because it's a software giant, it's a cloud computing giant. It's really at the forefront of companies trying to actually monetize AI to end users. So definitely want to see, as you were saying, like can it monetize? That's a front. That's a concern. Is like, they're spending all this money. When is that going to pay off? Because there's been big market cap gains, but it hasn't necessarily translated into profits. There's revenue coming in, but boy, there's a lot going out the door. So CapEx will also be very important. Again, there's this sign that even though Google, even though these other companies are spending money, it's like there any sign that they're going to lessen a little bit? Are they not going to keep increasing CapEx budgets? Are they going to start holding them steady or cutting them back? So big implications for Microsoft, the software industry, cloud computing, just so many different tech sectors. Really, really important.
All right, well, let's take a look at the chart, Ed, and I'm on the daily here. And, Microsoft has been rallying this year. Nice move since this breakout back here in May, but, it hit this high, 468.35 high, and it's drifted lower since. And again, getting hit the last couple of days and really finishing below the 50-day line here. So what are your thoughts on Microsoft's chart as we head into earnings?
Yeah, just not looking good at all right now. Even when it was doing the uptrend, I mean, now it's easier in hindsight to say, but after the pop, there really was only one really strong volume day, and it doesn't look like the price moved that much on that day anyway. So it was sort of a low volume move. And then you see on the downside, there's some noticeable drops, especially the last 2 days, some heavy volume coming in. People want to see is like, well, again, is this going to pay off? It's not saying that Microsoft's going to, of course, there's going to be some payoff, but is it going to be justifying this gains that it's had as a stock? And it doesn't say it can't. I mean, we saw ServiceNow bounce back. There have been concerns heading about that, but need to see this have real implications for so many sectors. Yeah, it needs to get above the 50-day line and maybe do that decisively. Maybe there'd be an entry there. Maybe just need to base out again because right now it's something that you just have to watch. And if you've been owning, if you bought it off a more recent breakout, you'd want to be getting out. If you're a longer term holder, well, you can wait and see, but you just have to know, well, what are your exit strategies? Decide what those are.
And Ed, when it comes to the fundamentals, we've been hearing so much about this AI hype and Microsoft having really good results over the last year, holding steady in the mid 20 range in terms of EPS growth, sales looking in the teens. What are your thoughts here on the fundamentals and what investors really want to see in terms of, again, AI bringing the money in?
Well, yeah, that's what they want to see it in, to see that continuing. The growth is supposed to slow a little bit. And also keep in mind, when you get that report that's an hour in, they'll finally give guidance. So it takes a while. that can change things around. If you go to a weekly, as you say, like it's had this consistent growth. Look, software makers often have that consistent growth. It has that track record. And if you scroll back up, we can look at the earnings stability rating. That's a 6, and 1 to 99, lower being better in terms of stability. There's a reason why this has been a long-term leader. The relative strength line has sort of moved sideways for better part of a year now. But it does have a good long-term track record, but it hasn't been wow. There have definitely been other big winners as AI stocks, in recent months, but it definitely has been a solid performer as well.
All right, well, let's go to the next name on our list, and that's Meta. The social media company is scheduled to report Q2 earnings on Wednesday, July 31st. Earnings are expected to rise 58% to $4.71 per share. Revenue is expected to climb 20% to $38.29 billion. And here's why we're watching Meta. We'll want to pay attention to CapEx spending figures. Again, Ed, as you mentioned, those AI spending numbers are going to be important. We'll also want to get an idea on the performance of their AI and metaverse initiatives and how those spending priorities are stacking up. We'll also want to see details on China e-commerce ad spending on the Facebook and Instagram platforms. So Ed, Meta is really, second behind NVIDIA in terms of performance among Magnificent Seven stocks this year. But shares have been in a little bit of a slump ahead of earnings. And I think investors are really going to be looking at Mark Zuckerberg's comments on Meta's AI vision. And, he made some comments earlier this week, one ring to rule them all, but it seems like he thinks there's not going to be one AI that's going to really capture the market. So what are your thoughts on Meta heading into earnings?
Yeah, I think it took a hit for a few reasons. And we've seen some, like one is that there's a whole bunch of factors. One is the Trump trade. If President Trump comes back into office, well, he hasn't been favorable towards Facebook, but more importantly, he's basically said, I don't want to ban TikTok. So that's an issue. So that's hit some of the social media companies. Google had mixed numbers on online. Online advertising overall was strong, but YouTube advertising not so much. And they're all spending a lot of money. They're all spending a lot of money on things. So this one, it's just an issue there. Can they have this? The growth rates are going to slow down quite a bit. They had this huge tailwind from online advertising picking up. They curbed spending a little bit on the metaverse, and that helped things over a couple of years. But some of those things the spending's continuing while the growth and revenue is going to slow. Still pretty strong. It's had a number of quarters of accelerating growth. That's probably going to be ending soon, this quarter, and so that'll be one issue. Again, it's just sort of like, can the fundamentals live up to investors' expectations? And I think investors are just getting a little worried after some really big gains.
Well, let's take a look at the chart, Ed, and I'm on the daily here, and Meta closed below its 50-day moving average back on July 17th, and it's really just kind of trying to find its footing here. If you got in at this breakout, this cup with handle breakout, definitely probably a pretty clear sell signal. So heading into earnings, what do you want to see this chart do to really put it back on your radar?
Yeah, this one needs to get back above the 50-day line, maybe that 500 level. It's got work to do. That's a pretty big drop it's had. It went from 540 to 450. That's, I don't know, like 18%. I'm just throwing that out. That's a pretty big drop. It fell, it started struggling before the other names really came off. They've now fallen, most of them fallen below their 50-day lines, but this one did it a little earlier. It's just, it had some big gap. The last earnings report, it sold off. So that's a concern. Like it did eventually come back, but it's had that record. There's a whole battle area from that last prior one. So there's been this whole weird stuff, some gap ups, hasn't really, cleared that whole area. Needs some work. It may just need to base. And for longer term investors, if it breaks through that 200-day line, that would be maybe a sign that there's some real issues there. Because I would also be getting close to the lows that it did from the prior earnings report. So it's close to breaking down below some really long-term-ish areas too.
And taking a look at the weekly, Ed, because, we want to mention, it's going to be a tough comparison against Q2 last year when they had, this triple digit growth, and you have this year of efficiency happening. So fundamentally speaking, how are you viewing Meta right now?
I mean, obviously, at some point, it's going to slow. The huge gain. Look at this. The stock. It went from about 100 to 500. Well, that's just not. That's because it just transformed. It transformed a company that was seeing just huge profit declines and couldn't seem to find a way to get out of it. There's a lot of reasons why, but that got worked out and just transformed. But now the growth is going to level off a little bit more, and that's okay. It's just you've got to expect that even if things right themselves, it's probably not going to go on that kind of run. Anytime soon. Not with the growth slowing a little bit. Again, doesn't mean it can't keep going up, but it's probably just going to cool its jets a little bit in terms of the rate of gains.
All right, well, let's go to the next name on our list, and that's Apple, which reports earnings on Thursday, August 1st. That company is expected to see Q3 earnings rise 6% to $134 per share, and analysts expect revenue to climb 3% to $84.18 billion. And here's why we'll be watching Apple. We'll want to see any indication if iPhone 16 production orders are running above normal for this upcoming AI-powered handset. And we'll also want to see how China iPhone sales have fared, from recent headwinds there. So Ed, again, all eyes on this next iteration of the iPhone. We're seeing Apple AI really starting to be implemented. We want to see if that's going to spark a hardware upgrade cycle. Apple getting some good news this week. Analyst at JP Morgan said, this is a positive catalyst watch. So again, this Q3 report's really going to set the stage here for Apple for the rest of the year.
Yeah, I mean, again, people are definitely going to be looking forward. The numbers will be the numbers. They probably won't be that great, but they haven't been that great for a while. There's just signs that it's just really going to be about, are they going to be that indications for the future iPhone? It's not only is it every other year, but going into the AI, that's really so, important for them. China's been a weak area, partly because, that it's been a while since they've had a major upgrade, also because Huawei and some others have really stepped up their game. One reason why Apple did so well in China for a few years is that Huawei was sort of locked out of advanced chips, but they've worked their way around that. They've got things, and so that was just going to naturally be more difficult. So they need to show that kind of strength going forward. It's always nice to see services. Can that continue to do well? That's a pretty high margin business. So if you can see that doing well, I mean, that's a lot of the App Store and other things. A lot of things that go in that, but it really is down, especially for the stock. Really all about the iPhone going forward.
Right, and I think there's some debate on whether or not that iPhone upgrade cycle is already baked into the stock there, Ed. But let's go ahead and take a look at the daily chart. It broke out of this cut base with a 199.62 buy point. Had a really nice run, but again, over the last few weeks has really come down and now trading below that 21-day line. So what are your thoughts on Apple's chart here as earnings approach?
Just to be fair, it's the only Magnificent Seven stock that's above its 50-day line. So, and this was a laggard for much of the year. You can just see that a huge run from like 160 to over getting up to 230 or so. That's a huge run for a company that really, the numbers aren't going to really show it. It's all about that future growth. Now, they very well may develop, and the numbers are, so a little bit better growth, for maybe next year, 10%. There's some hopeful on that. But it really is all about that for the report. I mean, really, it sort of needs to base. I mean, I guess it could come down to the 50-day line, but then that would be getting pretty sharp. If it gradually or leveled off and let the 50-day line catch up, then maybe there'd be some early entry around 220. That was sort of a resistance area. It's where it paused before making the last run, or maybe it just forms a new base here. And it could be that we are waiting on this one for several months before we actually get that iPhone. But right now, it's not in a place to be that it needs the chart to develop before we provide another entry.
All right, well, let's go to the next name on our list, which is Amazon. That company also reports on August 1st. The e-commerce giant is expected to see Q2 earnings climb 58% to 103 per share, and analysts expect revenue to climb 11% to 148.65 billion. And here's why we're watching Amazon. We'll be interested to see if there's any AWS revenue growth acceleration. We'll also want to see growth in the advertising segment and any retail profitability trends. So Ed, Amazon had about a 30% run to start the year, and I think expectations are really high. And I think analysts are looking to see if the company, as you pointed out and what to watch, can really continue this growth in AWS and capture some more of the market share there.
Yeah, I mean, that's, cloud computing, that's just this money maker, really. I mean, it's one of the biggest segments, but it's the growth area. Really, really important to see that, maybe continuing to accelerate, maybe some signs that AI is contributing to that. Now, I'm sure they'll mention anything that contributes. If they can say AI, any company will say it. So we'll see how much, take that with a grain of salt. You could say that with all of these, but there is that. Retail seems to become profitable again. For a while, there was losing money again. I mean, it was really AWS that was doing it. The fundamentals on this swing up and down. The guidance can be really wild on this run. So there's that. Advertising is actually another high margin growth area. It's not a huge part of it. It's not like Meta or Google, but it's becoming an increasingly important part of the business. So that's all there. But yeah, it's also kind of maintain market share because Microsoft's Azure has been growing faster. I think Google Cloud, which is a more of a distant third, that's been growing pretty well as well. So kind of keep that up because that really, really is important to its future. The numbers have been really good for Amazon lately, so I want to see that continue.
All right, well, let's take a look at the chart. And again, I'm on the daily. Amazon broke out from the flat base pattern with a 191.70 buy point on June 26th, but the stock has been pulling back and it closed below the 50-day line on July 18th. And again, it's kind of looking like it's trying to find its footing here. If you got in at this base, you're in a loss zone. So hopefully you would have sold. But Ed, again, give us your thoughts on the technical action here.
Yeah, I agree. If you're, especially with earnings coming up, you're in a loss area, you should be getting out below the 50-day line. A lot of sell signals. I mean, it doesn't mean it can't bounce back. This looks better than Microsoft. It looks better than Meta. It's been trying to get up back to the 50-day line. It wouldn't take that much to go in there. And I suppose if it got decisively above the 50-day line, especially if it got near the old buy point, which technically probably isn't valid anymore, but still useful because people were buying around that level. Those would be areas where maybe you could try to find some kind of early entry because this hasn't been as steep as the others, but we don't know. I mean, it needs to get above the 50-day line. I mean, it would not take much. It's basically flirting with recent lows. It wouldn't take much to all of a sudden be at the lowest levels in 3 or 4 months. I mean, when you're around these key levels, it just takes a little nudge. It's like in the NFL when you're a team at 7-7, a couple of wins and you sneak into the playoffs, a couple of losses, like, well, you're going home. And so even though the record isn't really fundamentally that different, it does make a difference psychologically. Got to get above these levels.
Right. And I think looking at the earnings reports from Microsoft and Apple and others earlier in the week might give some indication. But Ed, those were some of the big ones coming up next week, but there's a lot more coming in. So let's run through some more names, starting with chips. AMD, which is scheduled to report July 30th. And again, this one, hit this high back in March, and it's really not done much since, and now really below this 200-day line.
Yeah, this one needs a lot of work. And the thing is, this is a direct rival of NVIDIA. There's some other chip plays that are partners or complements. So NVIDIA's good news is, but NVIDIA has a clear technical lead over AMD. I'm not saying that can't come up. I'm not saying that companies might say, like, I'm desperate for chips. AMD is going to see growth. And you can see it hasn't really seen that growth yet. It's supposed to start happening, and it probably will, but it's nowhere near the growth rate of NVIDIA, which, and the valuations, like on a PE basis, are somewhat similar. And you'd much rather have NVIDIA's growth rate than, say, AMD's growth rate. You could argue that the March peak, there are some other names like SMCI that sort of peaked around that time. It's like, we'll buy anything AI related at any price. And now that was sort of the start of that, kind of situation where, again, not saying they can't come back, but AMD needs work. And the thing is that I'm not sure, it's probably more like an issue for NVIDIA. I would, do you want to see, is this good news for NVIDIA? If AMD can have positive news, or if they say something, what does it mean for NVIDIA? Because NVIDIA's the leader, and it's closer to being actionable. You could imagine with a couple of good days, all of a sudden NVIDIA is back above the 50-day line. All of a sudden, we're starting to talk about aggressive entries. AMD, that just needs work. It seems like it needs to get a lot just to get back to some long-term levels, let alone get toward highs.
All right, well, let's go to another chip name, and that's ARM Holding. The chip designer is also scheduled to report this week. And kind of the same story, Ed. We had this breakout back here in June and looked like it tried to move higher and then has just been fading slowly. And again, if you were in that base, you are now in a loss, and it is now right at that 50-day line.
Yeah, I mean, so that buy point is done. I mean, you could probably almost use it if if it rebounds and breaks the downtrend of this recent action, it would almost sort of coincide with that old buy point. So, I mean, you can still pay attention to it. The stock had doubled. It's doubled from the bottom after a real sharp drop back in April, then doubled very quickly. So it pausing here isn't the worst. I mean, it was way above the 50-day line, when it was making that first move to breakout. This one has some neat stuff going on. We talk about how much power AI chips use. Well, this is specializing in low power chips, getting a lot out of low power. So there's a lot of reasons to be excited about it, but needs to show some better technical action. But yeah, this one is definitely one to be watching.
All right, let's take a look at one more chip name, and that's Qualcomm. They also report next week on July 31st. Not looking as good as ARM. Again, we seem to hit this high back here in June, and it's just drifted lower ever since, and now really moving closer to that 200-day line.
Yeah, this is where we talk about 50-day line breaks being important. I mean, yeah, sometimes they bounce back, but sometimes they don't. And so you should need to recognize that. And people probably should have been, especially more recent buyers, cutting some profits. And now it's basically wiped out the entire gain. It wiped out a big gain from 176 to 230, and it's done all of that. I mean, yeah, potentially could bounce back from here, but it does a lot of damage, and you need to take action on that. It's not looking good.
All right, let's take a look at Arista Networks. They're also scheduled to report next week on July 30th. And again, cloud computing name, Ed, a couple of weeks ago, looking pretty good, hitting this 376.50 high. But as we've seen with a lot of these tech names, pulling back sharply here, I would say, and now really closing below that 50-day line. And if you were back here in this base, if you bought in, you're getting right close to that buy point. So what are your thoughts here?
Yeah, Arista Networks is one of these things, like when we talk about you need to pay attention to other earnings, Arista is one of the classic case, but boy, oh boy, is this going to be a crazy couple of days, because this is coming in the same day that Microsoft reports, and Microsoft is a 10% plus customer for Arista. The next day, Meta, another 10% customer. So this stock could fly all over the place. It could fly all over the place after the close on the 30th because of what it says, what Microsoft says, and then the next day Meta says. So this could go all over the place. So just be aware, this could easily rise or fall 20% with some whipsaw action in there. You have to be prepared for something. And if you bought recently, there's no cushion in there. If you're a long-term holder, well, you probably have a lot of steel in your gut because you've dealt with this before. But just know this is extremely concentrated over 2 days here.
All right, well, let's take a look at Trane Technologies. The air conditioning company also report next week, and holding up a little bit better, but this one really breaking below the 50-day line today. So Ed, what are your thoughts here on Trane?
Now, I'm not familiar if it's trying to get into AI. A lot of these cooling stocks have become AI adjacent cooling plays. But these stocks have come under pressure this week. There have been some other reports this week, and they just sold off. Anything AI was getting hit. And so that's just an issue. I mean, it's had a great run, but right now it's looking damaged. I'm not saying, you could set up again. It's sort of been consolidating sideways for a few months. So you could argue that, but I think this is probably just wait to see what it does before thinking about getting into this one.
All right, well, let's take a look at Carvana. They report next week, and I'm going to switch over back to the daily here. This one also, kind of holding up well. We had this breakout here June 25th. Hasn't really done much since, but up slightly today on July 25th. And but still, heading toward that loss zone and getting closer to that 50-day line. So what are your thoughts here on Carvana?
This is a scary stock. I mean, it is so volatile. The numbers swing around a lot, even on the fundamentals as well. This one it's had some big gap ups at the last 2 earnings report, but this is also plunged. Go to a weekly and you can see the mammoth run, and then actually a monthly. You need to go to monthly on this because you see the mammoth run, the mammoth collapse, the mammoth run. Could it keep going higher? It could also, this could easily drop 50% in the next month, and it would not be in any way out of character. So you just have to remember there may be risk reward on this one. I mean, if you're going to play this going into earnings, you may want to do an options play because boy, oh boy, there's potential big gains, potential big losses on this one for sure.
Well, let's take a look at a couple industrial names, starting with Caterpillar. They're scheduled to report on July 30th. And this one, it looks like it peaked above this buy zone here the week ending July 19th. On pace for a loss this week, and flirting with this 10-week moving average. Again, I'm on the daily here, but as we've seen, industrials here. Let's take a look at the industrial select sector ETF, doing pretty well. Again, kind of similar action. We had this peak above the line and a little bit down today, but what are your thoughts on Caterpillar here?
Caterpillar, like the industrials, trying to move up and then just hitting some resistance along with the market a little bit. But it's, strong report, it could get back up. There's definitely one to be watching, but at the same time, it could break below the 50-day line. And we don't, it's just, it'd be nice if it hadn't gone up quite so much, because then there might be an early entry, because now it does need to get back up to the top. It seems like it would need to get up to that double bottom buy point area to want to be jumping into it. This can go on some runs. URI, United Rentals, which is sort of related. That one had some nice action, at least intraday. Yeah, that one did well, but so it was a positive sign. But Caterpillar needs to now show it as well.
All right, well, let's take a look at one more industrial. That's Ingersoll Rand. They report July 30th. This one, again, kind of moving or trading around this buy point of 96.67, and it kind of a similar action here. It tried to break out, it's kind of rolled over, but hit that 21-day line on today on July 25th, but came off of those lows. So still technically in a buy zone here.
Technically in a buy zone, have to wait for earnings at this point. And with this and with Caterpillar, the RS lines are sort of improving. They hadn't done a whole lot while they were basing, but guess what? Going sideways or nudging higher looks really good when the S&P is sliding below its 50-day line. It's a big difference when the S&P is surging and the stock is going sideways. So that's helpful for stocks like that. So it's showing some strength, and it just, we'll see. The profit growth has been strong. The revenue growth, it's been slowing, that's for sure. There are a number of industrials that are reporting, like did this week, this coming week with Ingersoll Rand, the fall, following week. So it's something to be looking for. Don't ignore this sector. There's been some names in the industrial and the aerospace that are doing well.
Right. Well, let's jump into another theme right now with us, Sprouts Farmers Market. And, looking at a weekly chart, we kind of saw this 3 weeks tight area. But, really kind of hit this 10-week line here, and it's been trading tightly here. So what are your thoughts here as Sprouts approaches earnings?
Well, I know I do my part to help this company's profitability.
I do as well.
Right down the street from me, but it's like it's holding up here. The growth has been pretty solid. I mean, it's interesting because grocery prices are coming down. And that's partly because grocery costs are coming down. I'm curious personally as a shopper, but I'm just sort of curious, how are they managing that? Because they dealt with prices going up and they raised prices, but they were paying higher things and labor costs are going up. So can they continue to have pretty decent growth? Like they have very steady revenue growth. The profit growth has been pretty steady all as well. So, just see if that can go. It'd be nice if it based out. It's already had some couple short bases, hit the 10-week line a bunch of times. So it may need a longer period of time. Not saying it can't work, but it just feels like it needs maybe a rest. after a pretty good run, but really, really nice performance.
All right, well, let's take a look at Wingstop really quickly. They also report earnings next week. And, restaurants have been doing really well here first half of the year, Ed. And this one, last few weeks, really seems like it's broken down. It's below this 10-week moving average. So what are your thoughts here on Wingstop heading into earnings?
Yeah, I think, the mindset with, you really want to see the sector doing well. And the sector is not. Until a few weeks ago, this was one of the very top sectors. A lot, yes, there were the McDonald's and others that were not doing well, but there's a whole bunch of stocks, like Wing, that were holding up well, continuing to advance. It seemed like that just wasn't the whole, for whatever reason, that niche consumer, they were still sticking with it. But the stocks have rolled over. This one's holding up better than others. I mean, again, it wouldn't take that much to get above the 50-day line, 10-week line, but it sort of feels like it needs another base. It's ridden the 10-week line a lot. It wouldn't be that crazy if it, over a week or two got above the 50-day line. You could see a base emerging. I mean, it would be there. It's just something that's there. But this is richly valued. It's a very high PE stock, which sometimes happens with things with expansion. But if that growth slows, this will come under a lot of pressure. We've seen some names really buckle in the restaurant space, and you just have to recognize that this trend may be over. Maybe it's not for this one, but the sector is a real concern for this name.
All right, well, let's throw in another chicken theme stock just for the heck of it, Ed. Taking a look at Vital Farms. And this one, had a really nice run, really gapped up last earnings, but again, pulling back here over the last few weeks and now below this 50-day line. So what are your thoughts here on Vital Farms heading into earnings?
Yeah, some of those days on the downside were on higher volume. I mean, if you bought way back from the last breakout, that's different. If you bought on the gap up, well, you're giving up a lot of that gain. And, I'm not as familiar with it. Look, the growth has been, you've seen this accelerating growth on the revenue, the triple-digit profit growth. I don't know, egg prices go up and down. I mean, maybe they have their niche is going to be strong enough. I'm not as familiar about the ins and outs of this business, but that's something where the things can go very quickly from, the pricing can shift where all of a sudden you make massive profits and then just with a slight drop in demand or slight increase in supply, because avian flu has been an issue out there. If the bird supply comes up and chicken and egg supply comes up, that can happen quickly. But huge run. I think it's just something, you wait for earnings, you wait to see if it can get back above the 50-day line and set up a new base. But this has definitely been, it's been a surprise winner in 2024.
All right, Ed. Well, thanks so much for going through all of these names today. And that wraps it up for this episode of Earnings Cheat Sheet. If you want even more market analysis, be sure to tune into Stock Market Today with Alyssa Coram. That goes live after the closing bell. Thanks so much, and we'll see you all next week.